Hey traders, Jason here from Leavitt Brothers. I hope you're well. Today I'm going to offer a handful of sequences. Sequences are possible up and down paths that the market can follow. I don't know what's going to happen, but I can lay out a couple possibilities. All right, so here is the S&P 500. The drop off the high was about 35, 36%. Okay. Then we got this bounce. If I throw some fibs on here, the first fib, 38.5, 38.2 is around here. The second, the 50% fib is right around there. And the third, the 62.8 is somewhere over here. Okay, so we got a bounce right up to the first major fib, which happened to also be the 21-day moving average, and then we moved down. So the question is, what sequence could play out going forward? Okay. Overall, I'm bearish. I think we're going to go not just lower, but much lower. I think this is a bear market. This is not a pullback within an uptrend. This is not something that's going to fix itself quickly. Okay, bear markets don't end in 6 weeks. They take a couple of years. So I expect overall much lower prices, but the question is what's going to play out, say, over the next couple weeks, next couple months. All right, so let's go through a couple possible scenarios. Okay, I'm going to move the chart over so I have room to draw. Okay, so one scenario is like we have this 35% drop. We have a rally. And so one legit scenario is we just head down from there. Okay, just a very simple ABC pattern, and we just head lower. Things are just so bad that the market can't even bounce, can't sustain any type of upward movement for more than just a week or so. That is a possible scenario. This drop happened so fast and was so intense. The fact that it dropped so much without, there's a couple individual up days, but we went an entire month without having back-to-back up days. So big up day there, big up day there, big up day. I mean, these are huge up days, like 4 or 5% in some cases. But couldn't string them together, and the market just went down and down. So one possible scenario is that the market is so weak that this is all we're going to get, just a bounce to the first fib level, and we're just going to collapse from here. Okay, that is a possibility. Another possibility is we get something like, okay, so we got the move down, we get a move up. Another possibility is we get a move down that either tests a low or maybe undercuts the low by a little bit, and then we get some sort of ABC up, like some A, B, C up, and then that's the top and we head down. Okay, that's possible. Double bottom separated by a month, maybe 5 weeks, maybe 6 weeks, and then we get an ABC up as we start to head further into spring and into the early summer months, and people relax, and maybe there's a better treatment for the coronavirus, and people actually start to think, hey, that's it, that's the bottom, and we actually get a legit rally during the summer and into the fall. It's possible, maybe not into the fall, that's kind of far out there, but this is a possible scenario. Backing this up, instead of just an ABC up here, we can also just do like an AB, like C, D, E up. Okay, so it doesn't have to be, the ABC is just going to be like 1, 2, 3, and then the ABCDE is going to be like 5 legs. Either way, we still have double bottom, and then we're going to either go up 1, 2, 3 or up 1, 2, 3, 4, 5. Either case, I would expect whatever high to happen to then be the top, and then we head back down again. Okay, that's a possible scenario. All right, let's go through another one now. Okay, another one is instead of doing a double bottom and doing ABC up, what if we just do an ABC up like right now? Okay, for example, what if this was your A, this was your B, and just, we held up last couple days of last week and we just went up from here. And then we, came up to somewhere in the 20s, 28. I would say 2,800 is probably some sort of dividing line. But if we get somewhere in the range up here, maybe that would be the top. Okay, so this is a possible scenario. I actually laid this out on my website last week where I said, even after the market dropped, I said, hey, if we could hold this level, that's a possible scenario because this is an acceptable pullback. This pullback right here is an acceptable pullback for, if this is a mini uptrend that's starting, this is an acceptable pullback within that mini uptrend, and we can get the C leg after that. Okay, and then an extension of that would be, hey, instead of doing just an ABC up, what if this was your A, this was your shallower B, bigger C, shallower D, and then bigger E. Okay, so again, you're going to get an ABC up, ABCD up instead of an ABC. It's possible. This would be nice. It would extend a little bit further, get us a little bit higher possibly, give us a better, some better shorts. Also let longs last a little bit longer. Could it happen? Sure. We'll find out probably early next week because this pullback here can't go too far. Okay, so I'm laying out very similar scenarios here. One of them is just that the market does this, and one of them is that the market kind of does a double bottom and then does some sort of sequence up. So those are the two main upward sequences. Is just that we do an ABC up right now or an ABC up after a double bottom. Maybe the ABC is an ABCDE, and then the bearish scenario is that we just simply head south from here. Now, which one of these is going to happen? I don't know. Okay, and neither do you. My suggestion to you is to not guess. Okay, of all the sequences that can play out, the odds that you pick and guess the right one, there's maybe 5%. Okay, and if you're wrong, which is likely, you'll miss many opportunities. Okay, so what I mean by that is, let's say you think we're going to do some sort of ABC up. Okay, let's say you think we're going to do something like this. So what's going to happen is you're getting long here because you think like this is the sequence that's going to play out. But what if we go down and test the lows? So you're going to get long and then you're going to get stopped out. And then when we actually do form a low down here, you're going to be gun shy about getting long. And you're not going to do it. You're going to be sitting on the sidelines, pissed off that you lost money on the way down. And then when the market starts to go up, you're not going to play it. And then finally, when it gets up here, you're going to play it. Or maybe when it gets up a little bit higher, you're going to play it, and there'll be a little bit, and then there'll be, some sort of, after it goes up, you're finally jumping late, and then there's going to be a pullback, and then you're going to say, damn, I knew it was going to go down, and you're just going to misplay it. Okay. Another scenario that could play out is, let's say you believe we're going to do a double bottom. Let's say you think like this is the sequence that's going to play out. Okay. Something like this. Whoops. Okay. Let's say you think we're going to go test the bottom and then we're going to do an ABC up or an ABCDE up. What's going to happen is you're not going to get long here. What if the market actually just does this? You're going to miss it. Okay. And then if you think we're going to do, an A, a B, C, D, E up, then you're going to get long here. You're going to make some money on this. You're going to be willing to ride this down because you're thinking that this is just a minor drop within an uptrend. But what if we just, instead of doing a ABCDE, what if we just did an ABC? What if this over here was the top and the market just went like this? Okay, so it starts to move down and you're saying, okay, that's fine. I think we're going to do an ABCDE up. And so I got to allow this thing to pull back a little bit, and I'm just going to stay long. And then it just keeps going down and down and down and down and down. And so you're going to miss trade. You're going to mismanage trades, and you're going to miss trades because you're guessing what's going to happen, and the odds of you guessing correct are not very good. And you're going to trade based on what you think is going to happen rather than what is happening. Okay. Better to just be open-minded, be flexible, resist having a strong opinion, okay? Resist trying to figure out what's going to happen because you'll be wrong. And then, again, you'll mismanage trades or you'll miss trades altogether, okay? Don't be stubborn. Don't become convinced that there's going to be some certain sequence has to play out and then you trade around that sequence and then you either stay in longs too long, you don't get in long. Okay, even within a bear market, 2 weeks ago we had, at Leavitt Brothers, I profiled several restaurant stocks that went up 50, 100%, even more. Oil stocks may pop right now. They're looking pretty good. So again, if you guess, you're not going to guess right. You're going to mismanage trades. You're going to miss trades in both directions. You're going to get chopped up. You're going to think the market's going to go up. It's going to go down, and then it's going to go up, and you're going to think I should have just held. And then the next time you're going to get long and you're going to hold, but then that's going to be a top and it's going to go down. Just seriously, resist trying to figure out what's going to happen. Just accept everything that happens as is and just go with the flow. Use your signals, moving averages, technical indicators, whatever you use them, but really relieve yourself of the responsibility of trying to figure out and guess what's going to happen, because it's only going to make things worse. Okay? Thanks for listening. You can follow my YouTube channel right here by clicking the red subscribe button. And again, while you're sitting at home, take my mini masterclass in trading. It's free. There's a link below. All right. Thanks again. I'll see you next time.